Okay, y'all. So I really hope y'all made it to the end of this episode because now I'm about to wrap all of this up with the charts. Okay, we're going to look at the charts that's going to support everything that I have said from an economic standpoint. So let's go back to the bull market. I told you this definition was going to be very, very important. Look at these two definitions. The commonly accepted definition of a bull market is when stock prices rise by 20% after two declines of 20% each. Very, very important. Stock prices rise by 20% after two declines of 20% each. So this is a chart of the S&P 500. This is SPX, right? And we're showing you the last data that we've been going through since the beginning of 2022. And so you see that we've had a downtrend, right? Series of downtrends. But I have some trend lines here marked in white. And with Thinkorswim, you can hover over trend lines. So when you look at this first trend line, this was the first major decline that we had. This was our first major low that we had. And we declined 24.5% from the high, right? We had a great run up. We had a great run up over the summer. But what happened again? We had another decline. We had another decline of 19.28%. Okay, that's right there in that 20% ballpark that we talked about. And then we made that lower low. But then from October, when we had that bad CPI number, what has happened? The stock market has gone up 19.62%, which you can literally round up to 20%. And if you look at where we are and you look at where we were last week, we actually hit that 20% threshold last week. Okay, so remember that definition. We met that mark of that definition, okay? What's the next definition? The second definition that Investopedia gave us. The most common definition of a bull market is a situation in which stock prices rise by 20% or more from recent lows. This right here, if we can assume, right, we can make an assumption and a probability to say that this was the market low, we are 20% above the market low. This is why I'm saying that we need to have a conversation about a new bull market starting. I'm not telling you the stock market is going all the way back up here to 4,800 tomorrow. It's not what I'm telling you. I'm making an argument that the probability of us breaking this low right here is very, very low based on everything that we've talked about in this episode. Okay, let's go to my second point. Second point, look at what the S&P 500 is doing around this key level of 4,100, right? So I have the 4,100 level marked in gold, but I also have these oval shapes marked in gray that mark the key touches around this level. We had support here earlier in February of 2022, which was almost a year ago. We had resistance here in September. We had a double top right here, a double top, okay, that we actually broke out of. We had a small area of resistance, and then based on this, our gray oval, we have support. Okay, so this particular level has turned into resistance and support. Remember this, when a level goes back and forth between resistance and support, it is an extremely key level, and we need to watch what stock prices do off of that. Once we broke above this 4,100, stocks have not closed below 4,100 yet, right? Does it mean that stocks won't come back down a little bit? No, it won't. But what this definitely means is that 4,100 is a very, very key level, and the stock market has been able to hold it. The bulls right now have been able to hold it, and that is very, very important. Now, the last thing I want to talk about is break of trend, okay? Break of trend, market structure. What is market structure? Market structure is when we see a bear market, we see a series of lower highs and lower lows, right? Continuing to make lower highs and lower lows, right? In bull markets, we tend to see areas to where we see higher highs and higher lows. So in the year of 2022, we were clearly in a bear market, clearly lower lows, lower highs. We had the high, had a low. lower high. We had the high, then we had a lower low. Lower high, lower lows, lower highs, lower lows. This is still a lower high because you look at how it kissed this trend, and we made that lower low, which I believe may be the final lower low. Because look at what we have done. We have broken trend on the S&P 500. Literally, we have broken the trend because we have had this low, but we've had a higher high. Came down and had a higher low. We have not came back down to this low level, and we are pushing back higher. We have broken this trend line, and we are respecting this trend line. My argument is that if we respect this trend line, or we do not make a lower low and we continue to make another higher high, I believe that the market can continue on this upward momentum and continue to have positive trajectory. Remember what I said. Please remember this. I'm not telling you, and this is really, truly very, very important in this entire episode. This entire episode is not meant to tell you that we're going back to 4,800 tomorrow or next week. I don't know when we're going back to 4,800. What I'm telling you is that we need to start having the conversation. And the main reason why we need to have the conversation is because in bear markets, we spend more time in recovery in bear markets than we do actually getting to the low. So my point is, if you do not build your positions during the bear market while we are in recovery, by the time we get back to a bull market and everybody on CNBC and Bloomberg and Yahoo Finance, The Street, this, that, and the third, whatever publication that you listen to, by the time they tell you it's a bull market again, you've missed all the opportunity to get these prices the way that we were when we were talking about Tesla, when we were talking about AMD, when we were talking about Apple, when we were talking about Microsoft, when we were talking about TSM, when we were talking about all of these companies. This is what I'm telling you. This is why this is important. I really, really, really hope y'all made it to the end, because this is the perspective. You gotta put it all into perspective to really, truly see what I'm really, really saying here.